Could we really be looking at a 10% pullback this year? And more importantly than that, are we about to see it in the month of July? Today, we break down the stats of what happens next in an election year, along with the biggest dark pool activity and option flows over the last 24 hours. While the bears did take control of the levels that we thought they may, it does come back down to checking out a couple of different markets, as hedge funds are doing something very strange on oil that we need to discuss. And of course, Tesla finally broke out in the way that we've been discussing for so long. Congratulations to anyone that's been in that stock in recent times, but let's get into the big discussion surrounding stocks, commodities, and cryptos right now. Well, welcome back everybody to The Daily Show. My name's Tom, and today we're discussing everything from the macro to the data and what you need to be looking at in markets. It was a very interesting 24 hours because, of course, we saw breakouts in Tesla, Amazon reached 2 trillion, and of course, Apple also finding some buyers. Meanwhile, stocks such as the semiconductors continued to languish after what has been some amazingly volatile sessions. If it's your first time here, remember to subscribe and smash that bell icon. But I want to just congratulate anyone that's been looking at Tesla recently. We've been discussing that in broad detail in terms of options flow and of course also price action. And I think it's a great education piece on why you need to be patient and really look for the triggers when it comes to a stock like that. It took a while, but it was a very good setup and it ended up paying up big time in today's session. But let's discuss the first topic of today, which is hedge funds, because they are starting to pile in big time on bearish bets when it comes to oil. Now you might think, wow, that means I should be short oil, but let's take a minute to think about this. When hedge funds do something all together, are they really going to be correct? If you go back through and have a look at some of these moments in time, often these are periods where actually oil goes up for the next couple of months. And I think we're approaching a very pivotal point for oil in what is, of course, an election year. Meanwhile, when we take a look at actually managed fund money, you can see that that's started to actually pile in, creating what I think could be a short squeeze. And you may notice that some of the times this has happened has also coincided with the hedge funds also being heavily short. Now, when you get both together, you have a pretty interesting concoction. So we'll look at that chart later on today's video, but I want to get into whether we could see a larger pullback anytime soon. More importantly, if we do see a shorter term pullback, let's say do something like a 53.50 level on the S&P, will that be a buy the dip zone? Well, let's talk about number of market days since we saw large moves. And I saw a few of your comments and a couple of people were confused about this particular thing. This means a 2% down move in one day, basically a huge sell-off. And of course, it's pretty rare to see 2% down days. It's even rarer to see 3% down day moves. But it's been a while since we've had either of these. And these can last quite some period of time, or they can happen anytime soon. So we're starting to get into territory, at least on the 2% down move, that we haven't really been at since back over here in 2018. And of course, before that, the long period of time between 2003 and 2007 before the global financial crisis. So what does this mean? Well, it's been a relatively stable time in the markets. And I've shared this chart a few times, which is VIX term structure, which I love to look at, basically showing that the VIX is expected to get more volatile over the next couple of months. Now, don't go and buy the VIX for this. You'll get destroyed in roll contracts, but it does show you that we expect the VIX to go up. And in similar election years, you can see what's happened. Generally around that period of July all the way into November, we tend to see quite a lot of volatility. And 2020 was one of those extreme volatile times, as of course the market and nobody really did know who exactly was going to win. Now, when we break all of this down, this is how it looks in terms of an overall chart or arrow pattern, and we can start to then break it down as well with seasonality trends. And of course, in election years, as we've talked about, this is all election years taking into consideration. We're more likely to be following 2012 and of course one of those other periods. And what that means is that it's really doing a lot better than you would even expect during a normal election year. A lot of this reason, I think, is that we are not as, let's say, tight as you would think in the financial conditions. And that's leading on to, of course, AI stocks and concentration stocks doing incredibly well. So what tends to happen around if you took all election years? Well, this becomes a period of possible stagnation, followed by some movement up in August, and then decline into the actual election itself, with pickups coming actually into the election. Usually it actually starts to pick up just before the election itself, and it kind of like foreshadows usually all of the volatility before then. This is most likely where, if you're going to see a 10% correction, you would usually see it. So let's break down some more stats around that. First up, weird stat here, consecutive days with the S&P 500 price and breadth moving in opposite direction. Basically what this means is that price and breadth have been doing a very opposite thing for quite a few days here. And although it's fairly rare, the statistics behind it are not necessarily that negative. What I think is always interesting though is that most of the periods where you find this are back from the 60s and in the 2000s and 1990s. And guess what? They are the two most correlated markets that you'll see later on when we look at it with the current market right now. Low breadth, high concentration, new technologies. So during the month of July, is it generally bullish? Well, the answer is quite simply yes. In fact, if you actually took a look at intra-month seasonality, such as this chart here, you'll notice that it overall shows you that the first half of the month of July is historically one of the best runs. In fact, it is the best run of the year. And that has been pretty consistent throughout time. So if we are to see volatility, it would be expected to see it in the back end of June into maybe the start of July, and then maybe the markets continue up. And it basically shows you that when you look overall at the months of the year and when you have the best runs, the first half of July and the second half of December are the best two periods of time to be in the markets. So let's take a look at this chart here, which of course is kind of demonstrating that we might be in for some short-term volatility. The 25-day put-call ratio we've mentioned before, and it has correlated quite a few times with toppings in markets that have led into little bits of falls at that period. Now, because we know the first half of July can be quite positive, if we are to see selling, you've really got to think about it happening now. Maybe some end of quarter selling that goes through into the end of June. Then maybe July starts off a little bit weak and then starts to recover, and we hit some key pivotal points. Now, we are in what we call a negative gamma situation, and that means that the options flow, especially if the market is able to go below 54.40, which we'll look at later on today, that's going to force markets to continue to hedge themselves down below. Similar to what we saw with Tesla, but the opposite direction over the last 24 hours, which was forced to hedge to the upside, causing quite a large move throughout the session. When we look at the options flow, you'll notice here large tech has been generally the most bought thing. This is probably a lot of retail and of course large institutional buyers buying in to the FOMO, to the hype. And that's why it's kind of expected now that maybe we see a little bit of a slowdown here and a little bit of rotation into some of the other stocks, the other 490 stocks in the S&P 500. Does it make sense to sentiment reports? Yes, of course it does. Bears were nowhere to be seen last week. So to start to see bears come back through in the markets is historically normal. And we also know that the bull-bear spread is at the exact same point we were before the dip back in March. And these were quite small dips. So to answer the question, do we expect a 10% dip right now? It's probably going to be a no. If it's going to happen, it's more likely to occur later on this year, more around that August, September, October, November period where you see that VIX kind of spike up. Now, here's a good bit of news for the US economy, and well, it could be considered good or bad. Total number of flights tracked on Flight Radar 24 is going up. In fact, we've hit an all-time peak. And what we're seeing here is the TSA throughput on Sunday reached 2.996 million people on that particular day. That's a huge amount. It's an all-time record, and it's showing that people are clearly willing to spend and fly around, with flights back big time around the world, especially in the US. Now, is that something that could mean that people are living on credit? I would say so, but again, that is something that leads in later on into a cycle or into a process where markets eventually do fall off. Putting 2024 in perspective, are we due a 10% year? Yeah, we generally do see the average of market pullbacks to be 10%. Election years can be a little bit more bullish. We've already seen a 5.5, which is pretty normal. And usually an 8 to 10% would be in order at some point this year. And you generally get two major pullbacks, as in 5.5 to 8 to 10% every single calendar year. So that's something that you could be looking for later on. Overall, do we still think the market is bullish? Well, the answer is quite simply yes. Buybacks help that. So buybacks, of course, have been driving in huge amounts of overall market bullishness, and that has been bigger kind of growth factor to the S&P 500 than dividend growth over the last decade. And it's really helped to buoy this market into the high multiples that we see ourselves in right now. What about US rates? Well, this has become a discussion that everyone's talking about, but it's not really doing very much. And that's because if we take a look at the rates here, you'll see expected inflation is expected to be 2.36 in the future. It's currently running at a core PCE, which is coming out this Friday, by the way. So make sure to stay tuned for that, because that's the key thing that the Federal Reserve uses at 2.75. And the market currently thinks that the US has killed inflation. Now, generally speaking, what has been happening in some other countries in the world is policy is not restrictive enough. And say in countries where I live here in Australia, it's actually upticked for the last 2 months. And I believe in Canada as well, we've seen an increase as well in yield, in overall inflation. And that's basically showing you what we kind of fear here, which is that we're creating reinflation through not having restrictive enough monetary policy, and of course not having restrictive enough generally anything, so that of course that goes into the elections, etc., etc. It does become a political thing after all. S&P 500 up over 10% in consecutive quarters. You can see here that when we have a really good couple of quarters, the first quarter percentage is double digits, second quarter percentage is double digits, then we tend to have a incredible forward 60-month return, and in particular a forward 12-month return that's quite positive. Now, I'm not sure we're going back into some of these runs because, of course, some of these runs were at the beginning of cycles. But what I do think is it does make sense to see some pretty strong 12-month returns, especially considering what we've seen the Fed policy do and where we are in these stages of the cycle. And you'll notice here that we believe we're somewhere around this point right now with still more to come. So drips or dips or anything like that to the downside are still expected to possibly be met by bull demand. At the moment, we're trading very similarly to the dot-com bubble and the 1960s period. So both of those kind of correlate very closely with the market right now. And that makes sense because they were both quite concentrated markets with only a few stocks driving them across the board. And did they both have pretty bad crashes? Yes. In fact, some of those were so brutal that they ended up causing index returns. That is, if you're buying S&P 500, NASDAQ, to not recover for quite a long period. In particular, the dot-com bubble ended up bringing in so many stocks that weren't really worth their ratios that you ended up seeing almost a lost decade style of investment. And if you're interested more in that, let us know in the comments down below, and we'll talk more about whether we could actually see a lost decade over this current late cycle kind of bubble that we're seeing ourselves go into in the US. So let's discuss the cues here, because there have been some large trades, and I always pay attention to these trades, especially as a day trader or swing trader, to look for dips and to also look for rips. Now, in this case, we're getting a big trade here on the cues over the last 24 hours, and that coincides with, as we know, a supply. Now, yes, it could be a buy. We don't know whether it's a buy or sell, but it's a huge transaction going in right around those levels. And it kind of marks out with some of these other notes that maybe we're starting to see a little bit of selling pressure that could last maybe a week or two in these markets. And hopefully then the July period starts to find bullishness. Microsoft, one of my favorite stocks. In fact, one of the pillars of this channel. We talk about Microsoft, Nvidia, and of course, Google as one of my favorite three stocks in the markets right now. This one, I don't like the look of that price action. So Microsoft's come up and you can see just trade on trade on trade on trade. And guess what? Last 24 hours, more trades going through. Huge amounts of trades in Microsoft. Now you may think, well, that looks like accumulation. It could be buying up. And I think for the longer term hodler, it doesn't really matter. But it certainly looks ominous. I mean, that's so many transactions coming through on Microsoft, all in a cluster. And when you start to see these clusters, and I thought I'd use uranium here just to kind of dictate this and have a look at it, you can see that we have a huge amount of uranium trades over here that led on to a short. Couple over here led on to a bit of a buy. And we're seeing some large clusters again on uranium happening at a very interesting price action point, which we'll focus on later on in today's video. Let's now move over to rotation. What's going on when it comes to the stocks of the last 24 hours? Well, energy found a little bit of problems right around our downward channel, which we'll talk about later on. And we saw some strength coming out from the metals market, which I thought was interesting. And consumer discretionary continues to do okay. So that brings our 5-day total rotation value to biotech number 1, communications number 2, energy and consumer discretionary, 2 of the markets that we like the most at the moment, which just seems to be the way that kind of market's moving, and a resurgence of the reinflation trade, possibly. Metals markets starting to look a little bit more interesting. Now, when we look at copper very, very soon, and particularly copper CTAs, they are starting to show some pretty large movements across the board. So let's go over to the S&P 500 first and have a look at the last 24 hours. Who was in control of the session? Well, the best way to do this is to break down the smaller timeframes and to look at how the session actually traded. Now, after hours, after the market closed, it actually sold off again. But we basically made it up to where we expect the most traded zone to be. Around that 54.70 to 54.80 area is the most traded zone on the market. And this is kind of one of the last levels for the bears to take control of the market if they wish to. Who won? You would have to say the bulls won over the last 24 hours, but we did see some large transactions. So let's have a look at the futures market, and I've updated it here. So you can see here the most traded bear zone sitting right on 54.77, and we can see how the futures have interacted with this zone, pushing a little bit higher, pushing lower, coming up to the exact same area, finding sellers. So were we correct over the last 24 hours that this was more likely the bear area? I would say yes. To get further bears, though, to actually push this market, what are you going to need? A close below 54.40. Now, that just so happens to be the next 1-day expected options move low, which means that the market would generally remain stuck within both of these ranges 68% of the time. And a break below this area would trigger a major negative gamma event, and possibly what we call like a waterfall or a cascade event, where the market would start to eat upon itself as hedges have to hedge off their 0DTE options, and effectively all the writing would be offside and they could cause a bit of a fall. Now, this is the most important level, 54.40. A close below, I think, is quite negative, and we do need to go back to that other chart just for a moment and click on the daily, because we need to remember we cannot discount what happened here. This is still a very important candle, and that's the Monday candle. We rallied up, we dumped down, we closed on the low. Now, have we been able to actually take further lows and press down? No. So buyers have come in and tried to show commitment. But if the bears get back control of this, you can see why that becomes quite important. And I think the next major level for the S&P 500 is going to be around 53.50. Now, this would be a nice, healthy pullback for the markets, not an extremely big pullback, but just like 3%. And it would make sense leading into something like July. Maybe we get a sell like that. Maybe we find buyers here or even in the 5300, 5280 zone, and then we resume an upward trend for a little while, possibly finding that 10% pullback later on this year. Let's see if the stats kind of break that down. You can see firstly the negative gamma situation. Breaking below 54.40 would be huge, and it doesn't really matter which day you look at. There's still huge amounts of puts floating around these zones. Of course, if the market is able to take 5,500 again and that daily close wick high off Monday, then that's going to be a huge event towards pushing the markets up. And I think you've got to keep yourself open to both sides. Being a bear is very difficult in the market recently. CTA positions have actually positioned up, which I found surprising over NASDAQ and SPX. So they're kind of maybe starting to position in towards the July rally that's historically there. And I thought that was a very interesting point. But from us, just follow the price action. We know we're trapped within two zones. We know that the market on the daily and the weekly is, of course, bullish. And at the moment, we have to expect pullbacks that are even minimal to be met by buyers because it's been a very strong elastic market. I want to move over to copper, though, because copper has been falling through the floor. And of course, it fell through that 450 zone. And now we're kind of looking at 420, 425 area to find buyers back in it. Now, you'll notice the CTAs and price action have been absolutely in sync. So what are we looking for? We're looking for price action turnaround. we're looking for CTAs to buy up. Really enjoying the CTA chart here. I think that the synergies between both of them is quite good, and we'll be watching that. What about gold? What about silver? Well, not great news for gold and silver traders. The charts still look really bad. And although I'm bullish, of course, on gold over the medium long term, which means months into year or even years, it doesn't look that great. Look at the gold CTAs. They've dropped off. Price action hasn't made a new lower low, but certainly CTAs have. And that's kind of foreshadowing potentially some weakness there. Brent, meanwhile, as we talk about oil, we know that that's been stable. And of course, price action looks stable for now. So we'll go through that in a moment. Let's move over to a couple of major stocks. So first up again, congrats on Tesla. We know 200 is a massive wall. We know we're in massive positive gamma situation. The higher and stronger Tesla holds this week, the more chance we have to press through the 200 level even and to keep going up. And I think this is a case where if you're in, a nice position, you could break even the trade. You could potentially look towards scaling down a little bit and leaving some on. All of these things become open to you due to probably you having a pretty nice entry point down in these levels down here. So has it been a good trade? Absolutely. Has it been a trade of patience? Yes, absolutely it has. But it does show you how you can use a mixture of options flow and price action together, and really understanding the storyline and the psychology of the people that are trading it using the price action is such a powerful technique. I actually talk a lot about that in our day trading masterclass and advanced masterclass that you can find in the links in the description down below on our website. And yeah, it's a very replicable concept. You can use it time and time and time again through major stocks. Let's move over to NVIDIA now. So NVIDIA has been a case of positive gamma, recently moving into more of the negative gamma situation. Now, of course, we saw those 3 days of sell-off. We got the dead cat bounce back to the daily 20 moving average. And over the last 24 hours, around that 125, we found weakness into strength. Now, generally speaking, I think what this marks is chop for semiconductors. Effectively, they fell off for a reason. I believe there's going to be a lot of chopping for like a month, maybe 2 months for semiconductors as we find a new base for it and then hopefully move higher. I don't think it's the end of AI trades or anything like that, but certainly for NVIDIA, you've got to be careful of 120, 115, and of course 100 in the future. All of these mark very important points. The OPEX in particular, sitting at 100, that would be an amazing buy zone, of course, if it ever got down there. I'm sure a lot of you say that's not possible. Anything's possible with this stock. But yeah, if we get back above 130, of course, it's going to boom due to it being in a massive positive gamma situation. All right, so just before we jump into the charts and we take a look at all of the key levels that we need to be watching right now in the markets, I want to thank this sponsor of today's video, which is Tiger Brokers. Now, as you may be aware, if you've been watching videos, Tiger Brokers are offering many of you out there a special bonus offer at the moment when you sign up using our link in the description down below. But today I want to talk about one of their new offerings, which of course is options in the US, specifically for the Australian viewers out there, with some very attractive overall brokerage spreads with $95 per contract and a minimum of $3 per order. It's never really been cheaper to trade the US markets, but let me show you how easy it is to do it on the app. So let's take a look at how easy it is to place an options trade on the Tiger app. We can select one of our favorite stocks. Tesla right now has been very good. Select options, call, put, different expirations, and then select the strike. Now, at the moment, we're trading around that 195. So we'll go to the 195 strike, which is currently trading at $10.50. Now, if we want to buy or sell, we just go down and we press the buy button, but we can also see all of this other information that Tiger Brokers app is constantly taking your feedback on and adding to. It's as easy as putting in the limit price, selecting up and down or whatever price you're wanting, the quantity overall, and then basically executing by placing the buy order. It's pretty simple. It tells you how much you're going to need, and it gives you this confirmation statistic straight away. So as long as you know how to open up your phone, you know how to, of course, access options and you understand them a little bit more, it's never been simpler to use Tiger Brokers platform and, of course, trade those US options. Links in the description if you want to find out more. Let's jump into the charts. We'll start off here with oil. So remember that chart I shared at the start of the video? We talked about the idea that hedge funds are hugely short. So what I went through was I went through approximately the points where they were hugely short previously, just to show you how wrong they generally are. So they are hugely short here in the same way that they've been, so over on this side here, as they were here, as they were here, and as they were here. Now, in all those situations, we actually saw bullishness action from oil. Does it mean it's going to absolutely happen again? No. But that coupled with some money flow actually going to the positive side and CTAs remaining kind of a little bit more on the bullish end can push through momentum. So I think this is a very important factor when we start to look at the oil trade. And of course, we start to look at how oil stocks, energy stocks have been trading. Now, are they still in a downward trend? Yes, because of course you can see here that we've got downward trend. Though we do have some signs of turns. Specifically here, I think it's much stronger than any other time we've topped off in any of these periods here on the way down through the market. So this is the strongest sign. And while we could experience some weakness, that's kind of my main thought process at the moment towards energy stocks. I actually think that we may have bottomed. We pushed through the daily 20 moving average. Obviously, if we go higher timeframes, you can see that we're not quite through the weekly 20, which will be a very pivotal point. You can see how it's respected this weekly 20 quite a lot in history. So one of the best mean reversion indicators out there. And it's going to be an important closure this week as well. So energy stocks worth watching, certainly one we've got on the charts. What about our lead indicators, things like options and bonds? No freak out there in the market, so nothing to really report. Home builders, yeah, it looks pretty bad, but it's still in the accumulation range, still in the overall upward trend. So that and Dow Jones Transportations, both kind of staying relatively stable. And we did get a break on the upside of the American consumer, our XLY versus XLP indicator, again showing that the market does see that the American consumers are spending. And this is, whether it's on debt or not, it ends up becoming a growth curve for, of course, the market. Now let's move over to yields. We've got a mixture of US yields between 4.7 and 5 on the 2-year, so no movement on yields. Look to the core PCE price index. And copper, while it's continued to fall, did long leg doji. What I'm actually looking for copper to do is maybe move a little bit lower into the 420, 425 zone, maybe hit the 61.8 fib, that would be pretty sweet, and then hopefully find buyers. But remember, we need it to get above that 20 weekly moving average, or 20 daily moving average, or actually show us some price action commitment. I am getting excited though for the metals market once again. I think that the initial hype has worn off, and this is where, I start to get even more excited. It pushed below 450, couldn't get the turn. We continue to watch. Be patient. Remember, we say patience, react, don't predict in this case. Let's move over to the US dollar. Very strong movement there over the last 24 hours, pushing to the 105.76 area. And this is more in line with our weekly series of higher highs and higher lows. Again, even if the market pulls back, 105.20, 104.87, both of these areas you could find buyers at. And at the moment, we're looking towards a 106 plus for the US dollar. So it's looking relatively strong still on the charts. Meanwhile, gold's been taking a pummeling from that. And really, this is a story of the weekly chart. And we've talked about it so many times, so we won't go through too much of your precious time here to go through it. But you'll just notice wick, until we actually see some strength on the weekly. We have to think that it can push through 27.80. If it does, well, I've said it before, 21.75, 21.85, very possible. That would be a great positional zone. Really excited if it actually gets down there. And you might say, how are you excited about gold dropping? Well, if you feel bullish on something, sometimes you do want it to drop so you can get the better price. All right, let's move over to the next one here, which is Tesla. And of course, I've got to say this is a pretty nice chart. Very happy with our analysis. So well done, everyone, on this, and really happy that it's come through to the 195 plus. Now, this is, of course, bucking the trend of sentiment. I don't care about sentiment. The story is a waste of time. Instead, you should be looking at the price action. By the time the story comes out, usually it's already happened. And I think, a great case of that would be go and study a meta chart and have a look what happened when everything was so bad. Go and study Netflix, another one that you could look at the story or the sentiment versus the price action. That's why price action can be key. Anyway, this was a mixture of options flow and everything else. It is, of course, at that first level you want to be considering, but most people will also be able to see, I'm sure, the pattern here, which is possibly an inverse head and shoulders. And if you're looking at Tesla from the longer term, you could be getting excited, because if it is able to break through 200, which we know is a huge options call wall, then what do? Well, we probably go back to our heavily traded zone. Now, how much percentage is that away? It's quite a lot. It's 260 almost dollars, and that's kind of pointing towards some incredible strength. And I think for me, I'm going to be looking particularly at the weekly close this week. If it does push through 200, close the week above that point, it's really showing that through the weekend's probably going to gain some momentum. A lot of people will share charts like that, and it could get that kind of retail flow into it. Who knows? Maybe it'll be an AI discuss. Who even knows what the story will be? It doesn't really matter. Let's move over to NVIDIA, and you can see that the market went weak off the 20 moving average, and it came strong, and it closed the day as a relatively speaking bullish candle. I mean, it's basically a long leg doji, so it doesn't really know what it wants to do. I'm still open to this as the real possibility, or even this. I don't really think that NVIDIA is an excellent trade around this point. If you were lucky enough to buy that 120 zone we spoke about on the earlier parts of this week, then congrats. Otherwise, I think it's going to be a little bit of chop, and you'll have to just kind of look at it intraday. For position-based and investments, I still think it's pretty good. And semiconductors versus SPY, we've talked about what's the worst case scenario right now, probably down to the weekly 20. It's just been such a solid level. This mean reversion level has been absolutely the trend so far. So if we are seeing a deeper pullback, that's kind of where we expect the markets to get to. All right, let's break down uranium now. We saw that weird trade come through, and uranium, of course, has been a pretty good trend line. Now, I don't know whether it's going to go bullish or not. I just know there's a large trade in here and a bit of a cluster. I'm looking now for the reaction. I want to see the market actually start to implement that huge transaction that went through, or a couple of transactions. We have to have patience. So in this case, I'd like to see the market actually find some buyers, but I'm certainly on the lookout here. And you can see uranium is kind of on that trend line, looking like it wants to break below. But remember, it's the weekly. It's not closed yet. So let's find out what happens over the next couple of sessions. But uranium's been a pretty strong trend. It's certainly pulled back to this area, and a couple of large transactions have come through. Here's a disappointing one, HSI, not great. And it's not really due to Tencent. It just kind of fell off. And I think this is partly due to the US market. So a bit nasty here. Would have actually taken stops today and pushed down. Not really what I would have expected from the Chinese market at this point. Of course, we haven't had a major swing turn. We have had a little day trade turn. So that's probably going to get hit up, and that's something that does happen. But as you guys would know, for me, China is actually a multi-month play. And the reason why is because I do think that they've got some underpriced AI stocks. And it's not actually so much the Hang Seng that I'm actually trading. It's more the AI stocks. So things like Tencent and other stocks are what I'm looking at. So interesting one. We'll see how this ends up at the end of the session. And of course, we'll report back to you in the next video. Let's move over to the major US indices now. Dow sitting right around its first support. So no surprises there. Anywhere between 38.8 and where it is right now. Hopefully we find a buyer. And that shows us maybe some rotation. We look at the NASDAQ. It did exactly as you would expect. Came up, pressured the high, found some sellers, and now it's finding the next direction. So I think the US 500 is the clearer key here. 54.40, 54.50 closed below. And you'll notice there's actually quite a lot of weird wicks here, and then it actually closed below. Again, I think that the price action looks kind of negative here on the old NASDAQ. But you could argue, well, it's getting ready for an inverse head and shoulders. And it could be. And again, a break above here is going to put pressure on that daily wick high from Monday. And as we know, if it does that, plus July, plus the seasonal stats, plus everything else, markets have been incredibly bullish. Remain flexible on both ends. And while there are enough signs to say weakness could be coming through temporarily, of course, the markets have been strong. What about the US 2K? Not much going on here. Looks like it continuously looks weak. I'm not really bullish on the US 2K at the moment. We need to get a proper close above something like 2100, and it's just chopping at this stage in this zone. Let's now move over to a couple of other things. I thought Disney was worth noting above 105, just an interesting zone if it does happen in the future. And Bitcoin, of course, a lot of you guys looking at this and paying a lot of attention. Now, Bitcoin got a really, really good bounce off that first major support. I've since put in a bit of a fib for retracements back to possibly just under 60. And at the moment, it's trading around 61. Are there any turn points? Well, the only thing you could argue is the 2 hour started to look better. So for day traders, in this area of about 60K, you might be looking at some kind of temporary buy, trying to get hold of a dip. But realistically, it's just for position and investment traders right now. If the market is able to break below 58K, the next stop I would think is like 51 fairly quickly for Bitcoin, and that would be quite negative, of course, for the crypto market. It is not unusual to see these types of pullbacks, but as we detailed in our last video, we talked through it and went there. So go and check that one out as well. As you guys know, the most important bit of news at the end of this week is going to be always the core PCE. So make sure to pay attention to the core PCE, which comes out on Friday, and that's going to be the major information that we want to be seeing. So core PCE is the major bit, and we will report on that. As always, guys, if you enjoyed today's video, please give it a thumbs up and comment down below with your favorite stock right now. And also, just in terms of summary of what I think right now in markets, basically, I'm looking for potential temporary weakness here, maybe some nice little areas of dip buying, some good structure to come through, but as always, remain flexible both ways. And I still think it's a stock picking market. It's for single stocks and sectors are some of the best areas as we have a low VIX right now. Thanks so much. Bye, guys.